Time for the Trader's Edge. Joining us is Art Cashin, Director of Floor Operations at UBS Financial Services. Art, looks like we're going to start down here after some earnings. Perhaps not all disappointments, but what's your sense of things after we crossed that 10,000 level 2 days ago?
Well, 10,000 was kind of an artificial thing, David. We were there 10 years ago, and things were greatly different. Gold was selling at about I think $280 back then. So the world has changed, but we're still stuck around 10,000. Traders down here, I would think, in the majority still remain somewhat skeptical. We're at a couple of resistance points. So we'll see if expirations and rather mediocre earnings results are going to turn the tide here and maybe take a little steam out of this rally.
Yeah, a lot of guys, though, continue to play catch-up. I mean, nobody wants to be left behind, right?
Well, that's been part of the problem. The money managers have that difficulty. I think the rally breaks down into a couple of components. A lot of it was short covering early on. You see the short position on the New York Stock Exchange drop precipitously. And then the amount of cash on hand at mutual funds shrank rapidly, and there's not a lot of that. And it doesn't seem to be, to the benefit of the bulls, it doesn't seem to be a big rush of sideline money into mutual funds. So there's skepticism even among the public for now.
Yeah, now, you make anything of the fact that we haven't been making these highs, recent highs on a lot of volume?
Oh, absolutely. That's in the old Trader's Almanac. That is kind of a negative sign, also sometimes indicating a top being formed. But it's been, if it's a top being formed, it's being formed over the last 3 months. The other thing is also that the rally yesterday, putting yet one more new high for the year in, came with more declines in advances, and declining volume outstripped advancing volume. Those are the kind of divergences you don't like to see. It doesn't give you a lot of faith in the rally.
You can't have a 25% gain putting a top in, though, Art, right?
No, that's what I said. It's been 3 months of,
right. Well, that's what I mean.
Negative divergence.
Right,
yeah.
But you can't form a top when you're advancing 25 percentage points. That's like,
well,
right?
It is, Joe. What's happening is you get divergence after divergence. As Keynes said, the market can remain irrational longer than I can remain solid.
I could see I could see 5 percentage points maybe, but you can't call it a top form. You know, that's not forming a top if you're up a quarter of the value of the market.
Well, yeah.
Right. All right, we got to go.
It would be highly dramatic. I'll marinate some ice cubes over the weekend.
There you go. I know. I've heard that you are the man there too. We had someone in that said, "Do not have a contest with Art.
Okay.
That you will end up probably dead." Yeah, if you before he would. All right. Thank you, Art.
All right.